Ladies and gentlemen, our first keynote speaker of today, Mr. Andrew Tan, Managing Partner from ThinkBig Venture. Andrew is a serial entrepreneur and the founding partner in ThinkBig Venture, where his venture partners of the firm investment and management team has expertise in the industry as well. And we would like to bring you to join with us for the keynote speech on the conventions of venture capitalists. It's now time to welcome him on the floor. Please welcome Mr. Andrew Tan, Managing Partner, ThinkBig Venture.
Thank you. Morning, Bangkok! Why, is it still too early in Bangkok or what? Or everyone's still sleeping around? But thank you for welcoming me. My name's Andrew. Okay, I think this is maybe a very challenging topic as a first keynote speaker talking about confession of a venture capitalist. It's not something very sad. I just want to share with you what have I learned over the last 20 years in my entrepreneurial life. Okay, so just quick sharing about what do I do. Okay, I run a venture firm. This is my second fund in Malaysia. Our second fund size is about 10 million USD. It's called ThinkBig Venture. We focus on early stage from seed round to Series A investment. Okay, we are one of the 22 companies that are regulated by Securities Commission in Malaysia. So we are the 19th company in Malaysia. Coincidentally, over the past year, I could not invest into more startups because I could not find any more bankable deal. So what do? I invest into another operator, which is an equity crowdfunding platform. In Malaysia, there are 6 regulated license holders for equity crowdfunding. And I own another equity crowdfunding called crowdplus.asia. So we are still the leading equity crowdfunding platform in Malaysia. So basically, I'm the only one who holds a true license by Securities Commission in Malaysia. Okay, so let me give you some of my background. I graduated in Queen's Mary. I did my master's in 2002. And then after I finished, I got a Dean Award for my thesis in online fraud and prevention. So after that, I started to service for a company called eBay, if you still remember. But I think maybe some of you heard of Elon Musk. I used to serve under him when I was in PayPal. However, when PayPal was took over by eBay, so I moved on as well. And then life is a turning point. My parents got sick, so I came back from UK back to Malaysia, and then that's where I started my business. So with all the experience, academy, technical background that I learned in UK, I came back to Malaysia and started my first IT company. I founded an IT company that's focusing on telecommunications. And then I was doing SMS, premier marketing. And I got my company got IPO in Malaysia. And I was one of the youngest company that listed in Nasdaq during that time. So these are some of my background that I have served before. eBay, Tesco. I was also doing the regional expansion for Airbnb when Airbnb came over to Southeast Asia. So I was in charge of Malaysia and Singapore. And then I moved on to start my VC firm and then be my CrowdPlus. So I just want to share with you a bit about what the media say about me. Just a quick summary of my entrepreneur journey. I IPO 2 company, I IPO 1 company in Malaysia. My last company was IPO in Hong Kong. I am also twice a bankruptcy. So when you get IPO, then you get bankrupt as well. Then you go into IPO, then you get another bankrupt. Okay, so the media was actually quite lenient to me. I think they are very kind. They say my life is a venture. It's because I've been doing a lot of investing up and down. It's a roller coaster journey for me. And then I have another coverage which is by a Focus magazine, which is a business magazine in Malaysia, talking about me as a risk taker in life and businesses. Then when I started my VC, that was the title. Behind the VC company founded by a Malaysian who faced bankruptcy twice in his career. So people ask me, Andrew, what is entrepreneurship? Why do you still go up and down? To me, I believe entrepreneurship is about opening up yourself to a life of possibility. Then the first lesson you're going to learn in your life is that you're going to realize one thing. There are more people who are more talented than me and richer than me are working triple harder than you. Entrepreneurship is about you getting so that tired today, and then you know that tomorrow you're going to wake up going at life, and the only thing that wake you up is not your alarm clock. It's your passion. It's your vision that's driving you. So that is about entrepreneurship. So that was some of my coverage in the media. I was featured in quite a lot of TV, magazine, interview and stuff. I think another feature was about a successful comeback where I did about, they talk about my story since I was young, starting from 8 years old until what I have today. But I think my success is not defined by the wealth I've accumulated. I believe my success is measured by the positive impact I have with people around me. People who experience me understand what I'm trying to bring on to the market. So these are one of some of the latest articles. He who think big is not an ordinary thinker. If you realize my logo is a box, a lot of people, especially in the tech scene, especially in the startup world, you will meet with mentors who always tell you, try to think out of the box. But to be honest, in life, there's no box. Why do you want to box yourself? Tear the box away. Let your imagination run wild. That is life is what about. And then I have this thing about my quote in Tatler magazine, Malaysia. That I see people always tell me, you only live once. I say, come on. Everyone's living. Every second you're living, you will only die once. Make every second counts in your life, especially in entrepreneurship. Entrepreneurship is not risky, but entrepreneurship is risky when you're unprepared. So this is what about me. What I have done, speaking engagement, okay, I've been speaking in Taiwan. I just got back from Singapore speaking about the future finance, about how the future banking, how fintech is going to affect people's life. Also the chief trainer for Security Commission Malaysia for all the new graduates. So I judge for Texas. I'll be back here 2 weeks later. Okay, so some of it roundtable, ECF. I do a lot of workshop on how to raise successful campaign on equity crowdfunding. I speak on capital market. So basically, I just want to start my today's topic. So what does a venture capitalist really do? I've been getting a lot of questions about people asking me, Andrew, I'm interested in getting into startup. I'm interested into investing into startup. But how do I get to it? How can I become a venture capital? A lot of people will feel that venture capital is a very glamour job. But I can tell you honestly, deep down, venture capital is a very frustrating job. So what is a VC firm is all about? VC firm runs on two types of partners. One who funded you, which is, we call it the LP, the limited partners. And then the operation guy, the person who make all the decision and running the business is called general partners. So this is the structuring of a VC. So as a general partner, what is in there for you? Okay, first thing I would say, the upside of being a venture capital, yes, you get to meet a lot of interesting people. You get to speak on stage. You get paid for coming here. Okay? And then there is also a potential for you to make a lot of money. Potential only. Yeah? Based on the data, 95% of the venture firms do not last more than 5 years. So they actually go burst after a few years. So that is a venture capital. And then as a GP of a fund, this is my second fund. As a general partner of the fund, before you raise any fund from your LPs, they will need you to commit a certain fund into the size. In my structuring, I am committing 40% of my fund, of my own money into the fund. Because if you are not putting your skin into the game, how will you want your investor to believe in you that you are committed in this? Okay? So basically, as a VC, you're responsible for your LP money. Okay. I think the best part about this is every time I announce a good news, I invested in a company, I got something, someone is coming on the next round, I'm super excited because I know that there is a potential that I'm going to score a big win for my LPs. However, every time when you are struggling, and most of the companies do struggle in the first 3 years. So during the struggling stage, I'm extremely frustrated that I believe that I have mismanaged the fund. That kind of challenge in me is really draining me down. I was always thinking myself, why don't I just get another full-time job in a corporate, and then even I'm not very productive, even I'm not efficient, no one will notice my mismanagement of the fund. So to me, every struggle is a hard blow, okay? Because for me, going out, pitching, and getting my LPs to invest in me, I feel a deep sense of responsibility for managing their hard-earned money. So this is one of the real struggle that if I really lose out the money, I feel very stressful, and then I feel I am really committed into driving the value. So, but then, it's VC for everyone. Building a sustainable and profitable business takes a lot of time. You at least minimum takes few years, and then there's a lot of work to be going on. So if any aspiring VC or any aspiring angels is looking to invest into startup or equity financing, equity investment, if you are looking for a quick ROI that you can exit in 1 or 2 years, maybe this is not a game for you. Based on data, a standard startup company, from the moment they start to build their MVP till the stage where they can take over, it takes about 8 years on average basis. To get into IPO stage, it takes about 11 years. However, there are some businesses, we raise a big round of fund, are highly possible to exit within 3 to 5 years. So what does a VC do? Okay, especially in now, with the influx of a lot of technology, influx of a lot of funding, as a VC, you need to try to be smart with your money and compete with a pool of investors with dumb money. There are a lot of investors out there, a lot of newbies investors out there who invest based on very emotional way. So what do we do is that every time we negotiate a deal with entrepreneur, and getting a reasonable deal, it takes a lot of due diligence, working on with their business model, what is the expansion direction. However, after a few weeks of the discussion, of the negotiation, then suddenly you get another investor who is going to offer the entrepreneur with a ridiculous term and overfunded them. This is not a healthy ecosystem. What we're trying to create is that we do not want to overcapitalize a startup or a company. We also do not want to undercapitalize you so that you can have a healthy growth plan. Because why? The moment you are overcapitalized, you start to spend without really thinking what is the return of it. But when you are undercapitalized, you're going to work under stress, and then it's not very healthy for you to keep on growing. So what's the challenge as a VC? I think challenge as a VC is not about finding a good deal. It's about you have to vet through a lot of debt on a monthly basis. On a monthly basis, average, I'm looking through between 200 to 300 debt. And then the real challenge about it is to finding the gem in it. Then one of the challenges that I face always is that I get some really nice and smart people coming out with something really unworkable. They are trying to change the world, especially in Asia. I don't think Asia is a good country for us to actually creating something very disruptive. Why? Maybe because in terms of adoption rate, in terms of acceptance, in terms of infrastructure, in terms of the availability of the funding, I don't think we are ready for that yet. However, I'm not sure in Thailand. I'm not trying to imply anything. I always speak to my investing company or my portfolio company, do not try to research and develop because R&D come with a very expensive burn rate. I always tell them, try to research and copy. And then you innovate good solution to adopt to the local culture and solve the problem in the market. That is what I always advocate to them. Yep. So sometimes I think, then I also get to meet some interesting people. Very workable idea, solving a huge pain in the market, but they will come to me with a crazy valuation. So this is also the challenge that we are facing as well. But selecting a portfolio, the real struggle on selecting portfolio is not really hard because sometimes we do identify certain good portfolio. However, the moment you take a VC funding, I think the real challenge is that because my company, my firm, TinkBig Venture, invests in early startup. When we invest in early startup, the real challenge is most of these startups have limited resources. And then every time a VC invests into the company, we want you to have aggressive growth. But due to limited resources, due to limited human resource, we can't really scale at the pace that we wanted to. As a VC, I think, or maybe any angel investor, anybody can fund. But sticking around with the company, that will be the main challenge. It's not about the deal origination, deal structuring, valuation, due diligence. The real challenge for a VC is when the money is into the investing account, that's where the real work begins. Because you start to lose control of the money, and then the investing company will start spending at a certain burn rate. So that might be another challenge. Okay, so okay, just and then this a bit part about this venture. I want to share about this part is that what we are actually looking at as a VC, there are 4 key main criteria. The first thing is that we will want to look into the company, the team execution ability, the domain experience. Who are the team that is going to scale this business model? Secondly, we want to look into what solution are you proposing? What is your unique selling point of your solution? The third part we want to look into is what pain are you solving? For a scalable, profitable business, you need to solve a problem in the market. And then you need to identify the fourth part. Who is going to be the user of your solution? So this is what we are actually looking at before we actually drill on to work with you more on that. Okay, so just want to debunk another myth. I think I speak quite a lot long. Okay, when is the right time to take on VC funding? I believe everyone is very hyped, keep on pitching, raising fund. So if you ask me when is the right time to actually take on a VC funding, I will tell you, never ever take any fund from any VC. Why? Okay. I believe one thing, the startup scene have created a tech culture whereby fundraising has become one of their key activity. Every startup, they come up with a business idea, the first thing they thought of is let's create a pitch deck to pitch for money, rather than really generating value for the user. The business model has changed. Everyone, you go to every talk, every event, every conference, everyone will be sharing about how to raise fund from the VC, how to raise fund from investor. No one actually tell you about how to really build a sustainable business model and generating or creating value for the user or solving a big problem. I think this is a very worrisome situation where I think the market needs to start to change. And then a lot of startup is actually very depending on government, very depending on grants, very depending on angels to fund it. However, I would say as a startup, as an entrepreneur, you need to start to learn about building a business. What do I say building a business is that you need to start to learn with limited resources. Because by working with limited resources, it actually gives you it hones an excellent skill set for you to build your career. You need to start to understand about managing your own resources. And then when you have limited resources, when you start to self-funding, you will understand one thing. So from the first day, the very first day you build your business, you talk about profitability. How do I start generating profit? which is, I think, is a very important skill set. Because after all, sooner or later, even you raise fund from a VC or from whoever, IB, PE, at the end of the day, at some point of the time, the business needs to go into profitability. But why not start building it at a start? That is how you're going to scale it, especially when you're self-funding. I think the best part about self-funding is that self-funding forces you to think every single stage, every single moment. Every single time you spend a single cent, you will want to understand about the financial return, which I think is very important. And then with your own money, it motivates you to focus only on the essential, which I think is very crucial. Why? Because when you are overcapitalized, when you are running your startup with other people's money, you tend to spend without much thinking. However, with your own money, every time you hire a new staff, every time you want to launch a new product, a new feature, every time before you want to expand your business, you will think twice. What kind of ROI, what kind of return am I getting at? I think that is really a very good skill set, and then it helps you to build a sustainable business, which is very important into your business model. And then with your own money, the best part is about here. Entrepreneurship or startup or any company, you are bound to fail several times. Except that is a fact. No one is going to hit at the bullseye immediately once they start the business. But when you raise your own money, the best thing about it is like this. When you fail, you can pivot quickly because it's your own money. When you fail, when the business is not working, you will tend to close down the business and move on. Your time and opportunity costs are more valuable. However, because if you raise money from some VC or some other investor, you are bound to the working employment that you still need to keep scaling it. That even though that you know that the business might not be scaling according to the plan, you cannot pivot too quickly. You will just keep trying until you burn out all the money. And then, especially when you raise funds from a VC, you are giving out a huge, maybe a sum of equity to a VC, and then you are governed by their guidance. So you do not have a full control when you should stop, or when can you quit, or when can you actually sell. My point here now is not to say, asking you not to raise any fund. My point here is about getting you to bootstrap, understand your business. You can find creative alternative way to raise fund. There's always angels out there. There's always super angel out there. There are also strategic partners who might be keen in building the business together with you. I think that is actually very crucial than just raising capital. As an entrepreneur, as a startup, what you want to do is that you want to raise smart capital from the industry expert that's going to help you to drive your business together, that's going to mentor you, that's going to work with you to scale the business together. I think also before you raise a fund from a VC, if your business is not long enough in the validation process, you're not going to get into a good bargaining situation or bargaining chip to negotiate a good term. You might have to give up a huge chunk of equity into some other investors where you're going to lose passion in your business. Imagine if you're a startup giving out 60% in return of a certain amount of money. How will you feel when you start to scale the business? So ultimately, I believe that before you raise fund, real validation, what is the real validation of a business model? It includes customer acquisition, understand about your cash flow break even, how you need to learn how to drive revenue. Then you need to understand how can I operate my business in a positive operating margin. How can I increase my growth margin? That is the real validation before you actually go to a VC. I think that is the real challenge in the market. Nowadays, especially with so many failures and VC funds are drying up, selling them a big dream is not workable anymore. However, I would not say that because there are some business models in the market where there's extremely large business opportunity that you might need to have a large fund to start scaling. Okay, because you need to start to build the first market mover advantage. You want to be in the brand positioning, brand recognition, that people acknowledge you. You need to start funding. Okay, I would say these kind of businesses are about maybe Facebook, Google, Uber are a good example. But this kind of disruption is not happening in Asia. So in Asia, what I would say is that try not to disrupt the market. We are not in a situation to disrupt the market. Try to identify, try to build a sustainable business model that is solving a real-life problem. I think that is very crucial for the scalability of the business. Okay, so finally in this part, I'm not just saying that don't ever raise money from a VC. Try to think, what I'm trying to urge you all is that try to think through harder. Try to think through thoroughly. Understand about, be very sober, be very serious before you actually look for VC funding. There are a lot of people out there who are willing to give you a helping hand. Try to identify who are this angel, this mentor, this strategic partner who is going to help you to drive your business rather than just go to investment banking or just a VC just to raise a huge round and then start burning. Understand about profitability. Understand about how to create a sustainable business model that can fund you along the way. I have seen a lot of companies that are bootstrapping very well, and then the moment they receive VC funding, they receive a very good valuation because they have built a certain traction, they have validated all their idea, rather than just about, when I have an idea, the first thing I want to pitch is to VC. So try to understand about when is the best time to pitch to a VC. On this part is about, I get a lot of startup or company come to me. They ask me, Andrew, before I explain to you, can you sign an NDA? If NDA is a non-disclosure agreement, that means that whatever he showed to me, I cannot show to other people. I think the real challenge is about this. If your business can be copied just by telling others about that idea, I think that business is not bankable. Why? Because basically there's no barrier for entry. Idea is just dime of a dozen. Everyone have idea. VC investors are looking at the team, are looking at the idea, and then are looking at your execution ability. And then you need to have a very clearly defined goals on the problem that you are solving. What is the inspirational behind you coming out with this solution? This is what we are actually looking at, rather than just an idea. So if you go to a VC, you tell the VC, can you sign an NDA for me? I cannot disclose more to you until that you sign something, because this is going to be the game changer, this is the disruption, I'm the only one. I'm very worried when someone comes to me tell me, this is the first solution in the market, where especially it's from Asia. If we are in Silicon Valley, I might believe that, but I don't see that in Asia that's happening, that you're going to change the world by creating something in Asia. Okay, so, and then some people, should I disclose more information to the VC? And if I disclose more information, would they copy my idea? Would they actually bring the idea and pass it to someone, set up a team to execute it? To be honest, every month, we get few hundred pitch deck, we get few hundred ideas. Whatever idea, I believe, 15 years in the industry, I believe whatever idea they come to, I might have seen something similar. But until today, we are not interested in actually copying anyone's idea. However, every time before we invest, before we really make the final decision, it's really not about your idea. We are really looking into the founder. It's you who we are investing. It's the human that we are investing. And then the real challenge is that we are, how do I put it? During the last final approval part, before we make an investment, whatever valuation, whatever deal structuring, whatever classes of investment, at the end of the day, we look into ourselves. I ask my team, I ask all my partners, if I'm investing in this business, how can we all add value? How can we allow our investing company to leverage on our resources, on our experience, on our network to scale it? That is maybe my main motivation. When I IPO, the main reason why do I come back to VC world, I think this is a really experience that resonates me. When I was young, I started working since 8 years old. a lot of people in my life have given me opportunity and funded me. Maybe I'm really a good salesperson, but I think, and then about 3 years ago when I IPO my company in Hong Kong, I basically retired. At the age of 33, I stopped working. And then I've been doing a lot of traveling, running here and there. And then one day I went back to my hometown and met my mentor. My mentor asked me a question, Andrew, are you happy now? I told him, yes, I am. I'm doing traveling, I'm financially free, I'm retiring, I just enjoy my life. And then my mentor comes to me, Andrew, do you remember the first day when I tell you, when I help you? I do not want any return from you. All I want is that one day when you become successful, please help the other less fortunate, or please help those who wanted to be helped. All I want from you is pay it forward. It's really helping other entrepreneurs become successful in life. You know, after speaking to my mentor, I basically get 3 nights of sleepless night. I was like thinking, oh my God, what am I doing? So this is really a huge resonation about me. My motivation today is not just about making more money. Making money is to prove that what am I doing is efficient. But to be honest, the really truth is that I want to build a successfully group of portfolio of company. Because when you are successful, I own your equity. So that is what equity investing game is all about. Okay, I said maybe a bit delay. Okay, but just try to finish up. Okay, so what does a VC means? I think this is maybe some of the myth that you might want to understand. You might have pitched to a VC, but every time you pitch to a VC, some VC, after listening to your pitch deck, they seem very interested. They throw you some email. At the end of the day, the deal go off, and then they will tell you something. Oh, our fund is structured to invest in Series A and above. Okay, so what does the VC mean? It's not that they are not interested in your business idea. It's not that they do not want to invest. However, they think that you are still a bit too early. Why? Because I think the real challenge about VC game is that no one wants to get their hands dirty. When you invest in a very early stage, there is a lot of work to be done. And then you are risking my money. And then not every VC have the resources or capacity to help you to scale your business together. And then to be honest, after 15 years in the industry, when the startup fail, they blame you. When they make it, they never say about your name. So this is something that we face. So that is why a lot of VC have structured to start investing in Series A and above. They are investing in growth stage, in late stage, because it's a very tiring, a very challenging job to start helping or start scaling. However, I think this is a gap for us to fill. That is why I am only interested in investing between seed to Series A. It's not about us getting our hand dirty. It's about we are thinking, how can we we have accumulate a certain resources, accumulate a certain network during our journey in our entrepreneurship. We want to extend this privilege to the company that we are helping. I think that is very important. That's why we only invest in early stage. We want to help you to scale it together. Okay? So basically, I think this is what I'm sharing. My time is up already. Why I like Batman? I think I'm the bad guy in the VC market. So this is basically, yep, I'm done. I think anything good? Okay. Wow, this timer is scaring me. Thank you.
Thank you to you, Andrew. Your experience is fantastic, and thank you for motivating everyone here to be efficient venture capitalists. And thank you to you once again. เป็นหัวข้อที่